assets. It has green indicated in assets in this particular worksheet. And we need to make it go down because we gave away inventory. How do we make it go down? We do the opposite thing to it, which in this case would be a credit. So now we're going to think about the new thing from the service company being the inventory. And this needs to go down, so I'm going to copy that. I'm going to skip a line, skip another line because I need it to go on the bottom. And I'm down here in C12. Right click, paste it 1, 2, 3. Now, just the spacing of this is not vitally important, but it helps a lot if you get good at basically leaving a space between the journal entries. And even though I'm not going to put a new date here, but I am going to leave a space and make this into 2 journal entries. Many accounting books, especially older accounting books, will make this into 1 journal entry, and I'll show you that in a bit, but conceptually it could help a lot to think about it as 2 journal entries. So we're going to say that's going to be a credit in the credit column on E12, and I'm going to represent that as a negative. And in this case, we're going to take the cost now, not the sales price. This is how much we bought it for. So there's the cost. We're going to have a debit for the same amount. So the same amount on the debit, 3840. What's the debit going to go to? Well, we gave up the inventory in order to help us generate this revenue. That's the definition of an expense. So it's going to be down here in the expenses. These are all expenses. It's going to be the one expense that's not called expense, but the most important expense, called cost of goods sold. Cost of goods sold represents us giving up the inventory, using it, consuming it, expensing it in order to help us generate revenue. So I'm going to copy cost of goods sold, and that will be the debit. Notice that expenses all have debit balances. We're going to make it go up by doing the same thing to it, which will make net income go down. I'm going to paste that 1, 2, 3. So there's our full journal entry for the sales process. You're going to want to get used to knowing this very well because every time we make a sale, it's the same thing. When we go to a store and we buy something, we can easily think of this side of the transaction. Or if we bought it with cash, we say, okay, cash is affected and sales is affected. But we don't often see, obviously on the sticker price, we don't see the cost of what we're buying because the store's not going to tell us what the cost was. But if we do a perpetual inventory system, when we take something from the grocery store to the checkout counter is recording both sides of it if it's a perpetual inventory system. Also want to point out that we could think of this as 1 journal entry, and if we did, and we put the debits on top, you might see some textbooks have accounts receivable in this case, and then this being the second account because it's a debit, and then sales, and then merchandise inventory is the 2 credits. And that's proper in terms of debits and credits, but it's not exactly the easiest way to put something in order to see it conceptually. So when you're creating the journal entry, in order to understand it, both for auditing, to go back and audit it, to see it at a second time, or to create it when you're building the journal entry, I'm of the opinion that you'd rather put it in a format that would help you to understand what is happening rather than follow the convention of debits and credits, debits on top, credits on the bottom, in that case. So that's why we're going to break this out into 2 separate journal entries, but just realize that it could be in any order as long as the debits and credits are on the right side. So now let's go ahead and post this out. So I'm going to scroll over to this side. I'm going to make this a little bit smaller again in the taskbar. Let's go back down to 70. And we're looking to post the accounts receivable. So I'm looking for accounts receivable. It's the second account. So cash and then receivables on the general ledger. We're down here. Accounts receivables in the debit side. So we're on the debit side. I'm in cell O26. We're going to say equals. And I highly recommend using formulas. Point to that 6.4 in D8. When we hit enter, the 3008 will go up to 44.4. Then the second half of the transaction, sales. Sales is way down here. It's in the blue section. So I'm going to go assets, liabilities. Here's sales. Sales is way over here. It's in the credit side because we're crediting it. I'm in AB14. Remember that the letters go up to V or Z, and then it goes AB. So I'm in AB, which is after Z, equals. And we're going to point to the sales way over here on 6.4. That will make the sales go up in the credit direction. We can also see that over here on our trial balance, went up to 6.4, back in balance with the green 0, back in balance with the green 0, counting equation back in balance. What happened to net income? It went up. That's not a negative number. Well, it is for Excel, but it's a credit for us, meaning the credits are beating the debits in this case. Now we need to post the other side, being cost of goods sold. So cost of goods sold is right here on the trial balance. So that's in the blue section. So it's going to be over here in the blue section. Cost of goods sold, here it is way over here. That's going to be a debit. It's an expense. We always debit the expenses. We're going to say equals. And I'm going to point over here. Now notice I'm going to put my cursor down and hit the left arrow just so I can see it. And then there's the amount and enter. And so that made it go up. We can see it here. What happened to net income? Net income went down. So what's the effect of net income? It went up by the sales, went down by the expense being cost of goods sold. Net effect is income, net income, 2560. All right, then the inventory is going to have to go down. So inventory is here, so third account. So inventory 1, 2, 3. We need to credit it this time, so we're in cell T10. So T10, we're going to say equals. I'm going to point to that credit of 3,840 and enter. All right, so there we have it. And then we've got that one thing again where we have a receivable now. People owe us 44.4. We might want to know more detail about that. So to get more detail, we can look at the general ledger, which gives us detail by date. But in this case, I want detail by customer. So you don't need to do this for this problem particularly, but later on, we're going to need to see that detail, and we can call that the subsidiary ledger. So if we scroll down to the subsidiary ledger, we have the receivable side over here. Here's our companies. These are our customer companies. And we need to break down that same number by customer. So in this case, I believe it's I company that owes us. So we're going to go down here to I company. And so I'm in E19. I'm going to put that in the debit. And I'm going to do this with a formula. I'm going to say this equals. I'm going to go back over here. And we're going to point to the receivable account, which is down here, the 64, and enter. So now I company owes us 64. If we add up all the people that owe us money, all of our customers, then it's all these owe us money. And the total should add up to 44.4, which should tie out to the 44.4 in the receivables here and the 44.4 here. All right, let's do the next transaction. We'll make us a little bit larger here, back up to 90. So the next transaction is as of 4/1, so we'll skip a line, put 4/1 on this transaction. It says we paid a company for purchase on account in the past less the discount. So we paid company, so let's just think about that first. First question, is cash affected? We're going to say, yeah, we paid something in this case, so therefore cash is going to go down. So we have a debit balance in cash. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So I'm going to copy the cash. Here's the date. I'm going to put that on the bottom from the date in cell C15, right click and paste it 1, 2, 3. So then the question is, how much are we going to pay? Now, note that the problem basically broke this out for us in this case, saying we're going to pay 10,192, and that's because we paid within the discount period and got a 2% discount. However, many problems in the future may not do that. We may have to do the calculation, so it's worth thinking through that real quick. So if the original amount was 10,400, we are now going to get a discount of 2%. We could say times 0.02, 2%. That means we get a discount of 208. If we subtract that from the original amount of 10,400, that means that we're going to pay 10,192. We can also calculate that amount of payment with a bit quicker calculation that could be useful when we're thinking about sales and whatnot. 10,400 times, if we're not going to pay 2%, we are going to pay 100% minus 2%, or 0.98, 98%. That's how much we're going to pay. So when we put that over here, I'm going to put it in the credit column. I'm going to put a negative, and I'm going to do the calculation one more time so we can see it. 10,400 times 0.98. So 10,400 times 0.98 will give us that credit, the amount we're going to pay of 10,192. Then what's the debit going to be? Well, we paid something and we didn't get the inventory today. What we did is we got the inventory in the past and we're now paying off the accounts payable. Accounts payable has a credit balance and we're going to debit it to make it go down, because the debit would be going the opposite thing to it as what it is. So the debit is going to go to accounts payable. Going to right click on that, copy it, put our cursor in C14, right click and paste 1, 2, 3. Now the difference here though is that we're not going to debit for 10,192. Why? because we put it on the books. What's included in this number is that 10,400. That's how much we included in there when we made the purchase. Therefore, we got to take the full amount out. Now we can see this a little more clearly if we look at the subsidiary ledger for Company A. Company A, if we go to the subsidiary ledger and we're looking at the accounts payable, and we owe 10,400 for that original invoice, then we have another invoice out. We need to reduce this original invoice by 10,004, not the amount we paid, because if we do not, we'll still have that remaining balance that we're showing that we still owe and we don't owe it. So I'm going to go back to the general journal and we'll enter the full amount up here, 10,4. There we have it, Roger out. All right, so now our debits don't equal our credits. We're going to need a credit here to balance this out. If we highlight these two numbers, we'll do the calculation for us. There's the 208, our discount amount, and that's going to be the credit that we will need. I'm going to calculate that again using the negative sum. I call this the plug formula, negative sum of these four cells. That's what we need in order to be in balance. That's our 208. Now, you might say, well, okay, what's the account going to be for the 208? And many people will think, well, that should be sales discount. And it is a discount, but to us, it's a purchase discount in this case. It's not a sales discount, would be the discount that we gave to our customers. This is a discount that's given to us. And if you think about it, what happened is we overstated our inventory. Because last time when we purchased the inventory, we put it on the books at 10,4. And now we've realized that we're only going to pay 10,192. Therefore, we need to reduce the inventory amount by the overstatement of 208, the amount of the discount we got on it. So we need to reduce this as a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. So I'm going to copy that, going to put it on the bottom in cell C16, right click and paste it 1, 2, 3. All right, so then we're going to post this out. So I'm going to scroll over here, going to go to our taskbar, make this a little bit smaller so that we can see more cells in it. We're going to post out the accounts payable first. So there's accounts payable. Here it is on the trial balance. Therefore, it's down in this order. So I'm going to look for those orange accounts over here. That's the first orange account. And we are going to go to the debit half of it because we're on the debit column over here. So we're going to go in the debit column over here and equals and point to that 10,4. And there we have it. That brings the amount that is owed down because we're paying it off. We didn't pay 10,4, but we're reducing it by 10,4 because we got a discount that we're never going to have to pay, that 208. So then we're going to have to go to that cash here, and we have the 10,192. That's the cash account is here on the trial balance, the first account here on the general ledger. We are in the credit section, so we're in cell P9, and we're going to say that equals, point to that 10,192, and that's going to bring the cash down from 89 to 78,808. We can also see that on the trial balance here. Now we're going to post this last piece from the general journal to the general ledger. It's the inventory account, also an asset account, third account on the general ledger, 1, 2, 3. This is going to be a credit, so we're in cell T11 equals, going to point to that 208. That's going to make our inventory go down by the 208 to this 251,452. Also want to note that we have now affected or posted to our accounts payable. We also want to see the accounts payable by vendor here. So we don't have to do this for this problem, but I want to show you for this problem that we should record this on our payable account by vendor as well. So here's the vendor, and we can see that there's the 10,4 owed to A. We paid it now, so we're going to record the same activity on the general ledger. I'm going to say equals. I'm going to point to the general ledger. I'm going to record the same activity that we see in the GL, but instead of being ordered by date, we now see it in order by who we owe, the vendors. And if we scroll down, we can see that if we highlight all these, okay, there they are. They all add up to 93,200. That's how much we owe according to the subsidiary ledger for AP. That ties out to 93,200 for the general ledger. That ties out to the amount on the trial balance. Okay, so let's see the next transaction. I'm going to scroll back over here. Going to make this a little bit larger like so, back up to 90 on the taskbar. We're scrolling down to 412 being the next transaction, skipping a line. Highly recommend skipping a line. And we're going to go down to 412 says receive cash from Q company for payment of invoice within discount period. All right, so we got payment from the invoice. Now this time we are receiving the payment. So is cash affected? And we're going to say, yeah, we see cash up here. But this time we got paid, so it's going to go up. So cash is going up, cash has a debit balance, we're going to make it go up by doing the same thing to it, which in this case would be a debit. So I'm going to copy that, going to put that on the top because debits traditionally go on top, right click and paste it 1, 2, 3. The question is what amount? Again, this problem gave us the amount. It says we're going to get paid 10